Hello, welcome. I know right now most people are gone for the weekend, but since I couldn't stream this morning, I felt like I'd like to do a end of week review, which might be a good idea going forward. Who knows if I'll have the time. If you can look at the viewer count, nobody watches, and I really just do this for myself. One day there'll be people watching and people joining the community. Anyway, my name's Frank. End of week review. The community is called No More Paper Trading. Link to the Discord is in the description. Of course, I'm streaming this live right now, but it can be, I guess DVR is the term. You can watch it later on the YouTube channel. But this was FOMC week. Pretty big week. Pretty terrible week for me. Last 2 weeks. Good as far as my longer term investments, but my futures trades it was pretty bad. Bit of a slump right now, and I guess that's why I'm working now instead of relaxing or doing stuff around the house. I really wish I could have traded today, but I had plans with the family that I couldn't get out of this morning. So I woke up super early, traded in the morning as much as I could, and yeah. Anyway, this week, let's take a look. FOMC was Wednesday. A couple other things scattered, news events scattered throughout the week. So this would have been Monday on the 15th. We started out positive. Wednesday was actually our lowest day, FOMC. But after the rate cut, I think maybe due to the Fed hinting at definitely 2 more rate cuts before the end of the year, price has recovered since then. This is the ES. Things look a little, as you'll see, I'll go through the NQ, the Russell, the Dow, gold and oil later, and you'll see different markets reacted differently this week, for sure. But I remember reading in a book, I forget what book, but a lot of traders look at the performance of Friday. If you have a crappy Friday, you're going to have a crappy Monday. It's just bad news for the following week. Well, today we made all-time new highs. Maybe that means Monday will be good. Who knows? But, yeah. We were able to stay mostly above the R1 pivot point at 66.44. Not any large, real huge movements up. It's not the best to look at the volume yet. Maybe on the continuous. Let's take a look at that. Now, I don't know how the continuous factors in contract changes. You do see gaps up and down due to the contract changes, which was this Monday, was a rollover into a new contract for most of the equities. Maybe all of them. I don't follow all of them. But I don't think that gap was on... Yeah, not on the regular chart. So I don't know how much you can believe the indicators on the daily. But RSI doesn't show any signs that we're gonna fall next week. Again, this is the first time I'm doing the end of week review, so bear with me if I have to invent it as I go. Also, MACD is increasing on the daily. So the so-called summer slump might be over already. It might have been the end of it in the beginning of September. When I looked at it the last few years, it seems October is more likely the end of the summer slump for most years. But who knows? If we head higher, we definitely have the pivot point at 67.59 to look at. I don't follow Fibonacci. There might be other areas to look out for. Maybe I should. Maybe I should incorporate it. I don't know where you're supposed to place it, though. Fibonacci time zone. Fib retracement. Yeah, I gotta look up how to do this. But the levels I usually use are the previous day's high, low, close, the previous month's high, low, close, the current month high, current month low. I keep 9, 21, and 50 EMA on my charts, but I don't play them as levels. I look at their slant and their relation to each other. Also, other pivot points I actually use. You can call them pivot points. I've called them trigger lines in the past because they used to trigger reaction from me. I use 50 SMA, 100 SMA, and a 200 SMA on the daily chart only, as well as opening range high, opening range low, and to a lesser extent, the session open. Those are my key areas if you haven't been here before, which nobody has. I got a few views, but I think they're bots. I don't know. But I'm happy, even for the bots. Alright, let's take a look at the NASDAQ. Even more positive. I think that's due to the news with Intel, NVIDIA investing in Intel. I didn't think it would react that great, but yeah, I don't know. Let's see what TradingView thinks. They don't give a reason. The reason never matters. It's often wrong or too late. At least that's my point of view as a technical trader, mostly technical trader. For the most part, the NASDAQ remained above this week, the R1 pivot point. Again, FOMC day was a negative day, mostly for the NQ. A nice bounce off of previous month's high. It kind of swept through, but it usually does that on FOMC day. But since then, we're recovering, just like in the S&P. Say next week, we might be poking at the R2 pivot point Sunday night. Who knows? this is where I get a little rough in my trading when we're at the highs. Eventually I should have rules for things like that, like only scalp at the highs, no long-term trades, or sometimes I can catch a reversal, but that's very hard. This week, like I mentioned earlier, this week was tough for me, and last week I lost all the gains I've made since basically April, just in the futures market. But it was all minor. It's just me playing around, trying to get really good with futures trading. So I really want to do that. I'm more successful in my longer term investments and trades, but I want to make an income every single day in the futures market. So these losses have triggered a major review for me for this weekend and next week, where I got to figure out where my weaknesses are and how I can improve or change those weaknesses. All right, Russell. Definitely the Russell is liking the rate cut. I don't know why it was lagging up until the rate cut. And even still, Wednesday was a little all over the place, as it usually is. But the other S&P and the NQ were rising in anticipation of the rate cut, whereas the Russell was a little iffy, which I thought it was in the bag, a rate cut. But, and also strange enough is today was a down day for the Russell. Not making it much further than yesterday's high here. Bouncing off a seemingly random area. But still remaining above previous month's high at 24.17. I think if price does come back down there, I would enter a long-term trade. I said that the other day too, and price just didn't really reach there on Thursday. I think I said it Thursday morning, or I don't remember now. But price never quite got there. Stopped short. But as far as next week, I would say, I'd say look for price to recover anywhere soon. I don't know. Let me take a look at the 5-minute. See, that's strange. The big, I mean, it's not rare to see a huge uptick in volume right before the close on a Friday. But it is strange that it was mostly buyers according to my up-down volume indicator, which I think is just a simple indicator. It shows you how many buyers and how many sellers in the volume. But strange enough, okay, now I get why the normal volume indicator is red. It's red because the candle is red. I wonder if I could change that, make my own. Let me check that quick. I would prefer it to be color-coded according to what most volume is, not what the candle is. I mean, does that track? Yeah, that seems to be the pattern. Wow, I've been reading that wrong the whole time. Growing, falling. Volume, moving average. No, I don't want that. Color based on previous close. So my option right now is to just turn off the colors altogether. I could change it all to monotone. But that's an idea I want to write down real quick. See if I can build an indicator that'll have volume but show the volume kind of like what's the name of that indicator? I forget. I'm going to look it up in a minute after I write this down. All right, sorry about that. I believe it was called cumulative delta. I used to use that religiously, and I don't know why I lost faith in it. But I think cumulative delta is more based on the ratio of buyers and sellers and price. That has factors in it too. Maybe I don't know. I think the last thing I need is another indicator. And I think with futures, because futures loses volume throughout the day, maybe cumulative delta wasn't the best. I don't remember why I didn't like it, but can't go back to it now. I've got too much pride. All right, let's move on to the Dow. Take a look there. Interesting. The Dow actually had a positive day today. Slightly positive, depending on what you count as the close. I use settlement as close, which I think is a 415. I think they take the measurement. Okay, that's why it looks strange to me. Yeah, it is 4:15 Eastern Standard Time, 16:15. Anyway, on Wednesday, reacted positive mostly to rate cut. Did not bounce off of previous month's close like I thought it would. weak today. Wasn't able to get real all-time new high. It made an all-time new high, but not by much. Yeah, like 15 points, which isn't much for the Dow. And then immediately rejected it. Quite a lot of sellers. For next week, I'd say, I don't know. The Dow's like in these channels. I'll try to draw them out here. There's one here. Kind of. The bottom was a bit rough, but the top, there's a top channel. Then we had one going a little bit, basically sideways action here. Now, yesterday and today we broke out of that, which would have been yesterday's close is kind of the top line of that. And you also see this resistance area that's automatically plotted here. If you want to know all my indicators or my setup, I don't know if there's a way to share my chart setup. I don't know why anyone would want to use it. It's a cluttered mess. Or just know the indicators I use or show. I'm going to work on getting them listed in the descriptions or the video description. Otherwise, you can go to Discord and ask. But this specific one is support resistance zones. It's a great indicator. I've said it many times. So we broke above that. But I could see us coming back down and moving through this channel in here. How do I draw a line like that? Just forget we just go back and forth in here. Forget the ABCD thing. I don't really follow that. Honestly, I kind of forget what it is, the ABCD pattern. I found the key areas are places where traders tend to buy or sell in large numbers. The patterns are more, I don't know, for me they're just harder to use, and at least the way when I look at a chart, I might see 15 different patterns. And I'm thinking, well, which one is it? Or, what if a candle's 10 ticks away from a pattern? It's just too arbitrary. But I still want to learn them all more. And I still have to finish reading the Edwards and McGee technical trading book. Once cold weather hits, I'll have more time to do that type of thing. But right now, I'm far too busy with all the projects I started. Yeah, anyway, that's it. Gold. Gold is the one that hit me the most this week, and I think last week too. A $400 loser in gold. In the grand scheme of things, it's not much, but it sucked. But I need to get over it. That's enough of that. Anyway, these are just sim trades I took, which they worked out great. But I really thought gold Tuesday and Wednesday would start breaking lower and quickly. Especially that you see MACD was trending down for quite a while after this massive rise in price since like the last week of August. But then of course it waited till yesterday. And then today it recovered anyway. This is the sim trade I took actually. When price bounced off of yesterday's low and the R2 pivot point. I should have made real money because that's a pretty obvious area. That would have given me back all my money times 2. I'd like to start like a little series of things I should have known, or things I missed, or things I missed that I should have done, because the list is endless. And it can be used as a learning experience. You know, why did I do this? Why did I do that? Why didn't I trade on it? How can I see something like that in the future? But as far as next week, I don't know. I'd be a fool to bet against gold at this point, but I don't think we'll get above last month's high. But I'll be looking at, current month high at 3743.9. I'll be looking at that to see if price is going to bounce off there and then revert back to R2 pivot point again. You see a huge formation of resistance on the daily here. But I don't think that matters as much when price is in between it. But man, gold just kept going higher today. Which kind of goes against the narrative that people are going to gold as they take their money out of the S&P and the NASDAQ. Especially with them both making all-time new highs. I don't know enough about it yet. I'd like to learn more. That's why I started this community, so I could learn some ideas from others. All right, let's take a look at oil. Wow. I had mentioned earlier this week, as price was getting up to previous month's close here, that it was very likely oil was going to return to 62. I actually made the trade. Lost because it actually went up to this resistance area first, which I don't know if that was there at that time. Yeah, it must have been. I believe this is when it was created, where you see it start. What I should have done is noticed when it didn't reverse here, wait for it to reverse there. Add that to my list of where I can get better. But maybe part of my issue is I try to trade too many things. I got 6 different futures contracts I like to look at often. Maybe what I'll do is I'll limit, I can scalp any of them, except like real quick scalping. I'm talking like seconds. I want to practice that and get better at it. For that, I will just use like the NASDAQ and maybe the S&P. And for the longer term trades, I'll consider them all, except for the medium term trades, ones that might last 10-15 minutes to a couple hours. For those, maybe I'll do them all except certain times gold and oil. I don't like doing that with gold and oil because, as you can see, price can really range beyond key levels, even though it's technically still respecting those levels. It'll just wipe out all the stops. But as you can see, oil did come back down. And at the close, it was still trending lower. So I'll be waiting for it to bounce next week off of 62. In fact, I'll set an alert right now. Anyway, that's it. That's all I got for the week. Let's take a quick look at news next week. What's coming up? Oops. Fed speech. A couple of them on Monday. I tend to block those times out just in case, but it's not always necessary. A whole lot of speeches. So that day might be something, because traders will be listening for all of them to be in alignment on 2 more rate cuts before the end of the year. I think if any of them waver, that would cause a slight correction in the markets. Tuesday, we've got PMI. Oh, and Powell's going to be jibber-jabbering. I'll be looking out for that. Wednesday, I don't think I'll be able to trade on Wednesday. Probably be up early enough I can do something. I can at least stream for a little bit. But new home sales on Wednesday. Thursday, we've got another Fed speech. Jobless claims. Durable goods. A lot of stuff on Thursday. GDP. PCE. Yeah, Thursday is jam-packed. All at 8:30 too. Wow. And some Fed speech. And then Friday, the other half of the CPE, the month over month and year over year instead of quarter over quarter. I think that's it. Yeah. I think these are the big ones that the Fed looks at, even though they're limited, or I don't know. And Michigan consumer expectations. So that's next week. I will be streaming on Monday morning and probably Tuesday morning. Who knows yet what it looks like, but I will be Monday morning, 8:30 a.m. Eastern Standard Time. All right, see you then.